This guidance is an expectation, not a promise. No changes from the Bank of England regarding today's rate decision, but has an initial hike just been pushed further away? Christopher Dembik from Saxo Bank joins me down the line to discuss. Christopher, the Bank of England said global developments do not as yet appear sufficient to alter materially the central outlook described in the August report. But the bank did lower its estimate for the UK's economic growth in the third quarter of this year from 0.7% down to 0.6%. Is Carney correct to brush off the fears?
Well, Carney is correct to be very careful regarding economic forecasts. The UK economy is facing many risks in the coming months because we know that the worldwide economy is not as strong as we expected. There is the Chinese situation, but also we may face sooner or later a new emerging countries crisis. And also we know that we are in a world of very low inflation and in some parts even deflation. So it's a very tricky situation for the UK economy, both externally but also internally, because the domestic economy is not as strong as we were expecting for UK. The economic growth is mostly based on speculation, which is kind of worrying for the future of the UK economy. And we may see a slowdown of the UK economy in the coming months. So I strongly believe that Carney is very careful and is right to be careful in this kind of situation.
McCafferty was once again alone in his wish to increase the main interest rate by 0.25%, believing costs were likely to go up in the UK and lead to inflation overshooting the bank's target. But as you mentioned, in a world where basically no inflation exists, should we be looking at changing the mandates we give our central banks?
Absolutely. Because actually we are in a situation where most of the central banks only focusing on inflation, it was a right way to deal with monetary policy in the 80s, in the 90s, or maybe like 10 years ago. But nowadays it's not the good situation. We see we have no inflation. We are in a situation of deflation in some countries. So I am strongly in favor to increase the inflation target of the central bank from 2% to 3% or even 4% in order to provide more stimulus to the economy. There is also another way we can deal better with monetary policy is maybe to introduce, and it's one of the proposals of many American economists, we introduce a nominal GDP target. It could be a very good way to try to understand better the mechanisms of the economy and also to focus more on economic growth and employment, a job market. So it could be a good way, but I think most of the central banks are not ready yet to try to understand better their failures and to try to move on to a new target or to a new mandate, for instance.
Now, some say while the UK is an open economy, it's a lot smaller than the US, so why would you go first? Indeed, the market took the rhetoric as good news and buying interest in the pound increased against both the euro and the dollar, admittedly ahead of US data. But do you think the Fed will move next week? And what is your outlook for these pairs moving forward?
At Saxo Bank, we believe that there is a strong probability that the American Central Bank will increase interest rate next week. Because actually it's very simple, but the American Central Bank has almost reached its dual mandate. We are in a situation of very low unemployment and inflation, if we don't consider energy cost, is nearby the 2% target. So if the Fed won't raise interest rate next week, it will happen in the coming months. It will happen by the end of the year, in any case. We believe that, and our model shows that the UK economy will raise interest rate 6 or 9 months after the American economy. So it might happen as soon as spring 2016 in the UK. We are strongly in favor of raising interest rates because, of course, the economy is not as strong as in 2007, for instance, in the US or even the UK, but we need to move on to put some kind of risk in the market. So in this kind of situation, we expect that the dollar will still get very strong against the euro and most of the other currency. Our forecast for euro dollar is at 1.06 by the end of the year, in case, of course, we have interest rate in September or in the coming months.
Christopher, great to have your expert opinion once again. Thank you for your time. Well, that's all from me for the moment. The trading week might be drawing closer to an end, but the team has much more to bring you, so make sure you keep clicking back to Dicoscopy TV. Goodbye for now.